Many people are waiting eagerly for XRP to hit new all-time highs. But the truth is, the world's biggest banks are keeping their eyes on something even bigger, the Clarity Act of 2026. Here, that's why this upcoming legislation could be the key to turning XRP into the backbone of the US banking system, and why its price is destined for massive growth. As of February 23rd, 2026, everything is shifting. Ripple's CEO Brad Garlinghouse is no longer just optimistic. He is now predicting with 90% certainty that the Clarity Act will pass within weeks. This is not just about winning a lawsuit. It's about finally removing the stigma that has kept major banks from embracing XRP. The end of the SEC's lawsuit has been nothing but a distraction from the real goal. Now, with the Clarity Act on the horizon, we're seeing a clear shift in focus, from defense to aggressive market growth. The era of survival for XRP is ending, and the age of expansion has begun. Once this bill is passed, the world's top banks will have no more excuses. For years, they've been hesitant, fearing the regulatory fallout. But with the Clarity Act, XRP is finally being recognized as a legitimate financial asset, rather than something risky and uncertain. This marks the end of speculative retail trading and the beginning of serious institutional use. The US has been the last holdout in terms of clarity, but with things changing now, I believe the clarity that other markets have seen will soon be the reality in the US as well. And I have to say, the momentum around this new legislation is overwhelming. We're witnessing a fundamental transformation in the world of digital assets, one that's leaving social media-driven price spikes in the dust, replaced by strict institutional compliance. Banks no longer want a quick win. They're looking for liquidity solutions that won't get them into trouble with the government. And this data confirms that a tidal wave of institutional money is about to flow into XRP. Although only a few banks are running pilots right now, nearly 80% of major institutions have said that regulatory clarity is all that is holding them back from fully adopting XRP as their internal liquidity solution. The transition is happening right before our eyes. XRP is about to go from a coin that people trade to an integral part of the global financial system. And the window for retail investors to get ahead of the big players is closing fast. The real volume in XRP is not in exchanges or retail hype anymore. It's in the movement of money between global financial institutions, where XRP is becoming the infrastructure for cross-border transactions, faster, cheaper, and more reliable than anything legacy systems can offer. Currently, banks are forced to keep billions in dormant nostro accounts just to facilitate international transactions. But with XRP, they can free up that cash and put it to work elsewhere, unlocking a massive flow of liquidity. Integration of XRP is already happening through major enterprises like DXC Technology, which services over 300 million bank accounts globally. This allows banks to use XRP as the backbone of their digital transactions without their customers even knowing it. It's all happening in the background, at lightning speed. We're crossing a threshold from testing phase to full-scale production, as banks begin to realize the real-world efficiencies of integrating XRP into their core operations. Institutions like Deutsche Bank are already projecting savings of up to 30% in liquidity management costs. This creates an arms race. Banks that modernize their systems are at risk of falling behind competitors who can move money faster and cheaper. XRP isn't just a coin anymore. It's the vital protocol that allows financial institutions to move money globally with the same speed and efficiency as we move data today. And as we transition into this new system, the volume of transactions is going to skyrocket into the trillions. Now here asks the million-dollar question: can a bank afford not to adopt XRP when their competitors are saving millions on liquidity and processing transfers in seconds? The price of XRP isn't just about speculation anymore. It's about the practical need for liquidity at scale. A low price would create instability, while a higher price means smoother, more efficient transactions with far less market disruption. In essence, the value of XRP has to be high enough to absorb massive institutional transactions without causing price spikes. This is the liquidity paradox. For XRP to function as a global bridge, it needs to have a high market cap that can handle huge amounts of institutional activity without rattling the system. This isn't tea on is just about price appreciation. It's a technical necessity for the entire financial system to function efficiently. As more institutional players integrate XRP, the price will stabilize, driven by the massive volume of money flowing through the network. We're moving from a world where digital assets are driven by retail sentiment to one where their value is determined by the actual money they move. And when the Clarity Act is fully in place by April 2026, the volume of institutional money moving through XRP's infrastructure will completely change the game. This isn't tea about retail traders on their phones anymore. It's about real money moving through real systems. The critics may argue that Ripple AS launch of RLUSD is a threat to XRP's value, but they're missing the bigger picture. RLUSD and XRP aren't competitors. They're complementary. RLUSD provides stability, while XRP provides the speed and liquidity needed for international transfers. Together, they're making the entire XRP ecosystem stronger, not weaker. Ripple is in, T replacing XRP with RLUSD. They are giving XRP the structure and environment it needs to truly succeed. If XRP captures just a tiny fraction of the massive volume moving through global financial systems, the price will rise in ways that will completely challenge traditional valuation models. We are entering an era where digital assets are valued not by speculative trading, but by the total amount of value they can facilitate moving across the world. And XRP, with its efficiency and scalability, is perfectly positioned to be at the heart of this transformation. Professional financial models are already predicting long-term valuations of $20 per XRP by 2030, based on the projected demand for XRP in the global settlement space. This isn't a pump. This is the repricing of a global standard. XRP is being positioned as a multi-chain bridge asset, connecting the likes of Solana and Ethereum. And as the demand for XRP increases, so too will its price, creating a new era of digital asset adoption.